morning, traders. Welcome to the TMT Stock Market Strategy video for Monday, September 26th. Well, we did get a little bit of a pullback yesterday, I should say Friday, and that pullback definitely filled the gap from that Thursday morning gap up, follow through from Wednesday's FOMC interest rate statement. So we did get a gap fill, and where do we go from here? Well, we want to look at where we are in the calendar, and right now we're coming to the end of the third quarter, the beginning of the fourth quarter, and I like to add that I believe, from based on our technical view, that the fourth quarter is going to be an explosive fourth quarter as far as volatility and trading. Trading volume will be picking up. I could see that coming. We have the obviously the elections that are out in November. And I think that there's going to be a lot of jockeying for positions for the bigger fund managers, mutual fund managers, hedge fund managers, if you will. So they're all going to be jockeying for, well, what's to come going into, of course, the fourth quarter, which a lot of hedge funds are underperforming right now. So there's going to be a lot of pulling back and forth from the bulls and the bears here. And, again, we are at all-time highs. The S&P, you want to look at the ES, the spiders, if you will, are extremely overpriced. So it's only a matter of time before this whole trade unwinds. And what I mean by that is it's the free money trade, if you will. So that's something that we're going to be paying close attention to. I also think that sentiment is so extreme to the bulls that any negative or any bad news or anything comes out there that can rattle the markets will indeed rattle the markets in a big way. This morning we have Deutsche Bank rumors about undercapitalized. We also had Merkel from Germany would not lobby the $14 billion fine from the U.S. So they're in trouble. They've been in trouble for quite some time. Everybody knows that that's on the street. And that's just one little caveat. Then we had the Bank of Japan speaking last night. Market participant didn't like what the Bank of Japan said. Basically, central banks and the Fed are just about out of bullets. And what happens is when there is no more free money, if you will, and now they're going into negative interest rates, and it's going to be a big problem. And it's a big problem that they have at the immediate time. And I do believe that markets are topping and have been topping. Now, topping takes a while. You could still go up and make new highs. We could even still challenge the highs here and still have a market that's been topping. So there's something of interest that I want to show you, and that's going to be the dollar. I do believe that the dollar is when the markets are in, let's say, uncertain times and there's fear creeping up in the markets, aside from the VIX, the VIX, the VXX, whatever you look at, take a look at the dollar. Pay very close attention to what the dollar does, because that's going to affect our markets as well as commodities, precious metals, gold. You have it. It's going to affect it. Even U.S. equities and equities abroad, because that is one of the biggest currency trades that are paired up with, so it's something that you need to pay attention to. And I wanted to show this to you here. You have a weekly UUP, which is the ETF for the US dollar. Big bull flag here. You could see that. Now, it's going to take some time. This is a weekly chart, so it's not, we could still go down to 2387 here. This is a 200-week moving average, or 24, which is the a big support area on the daily, which I'll show you, and then catapult to the upside. Now, 2550 is what you want to pay attention to. If we take that out on a weekly closing basis, I believe that this dollar is going to really ramp to the upside. Now, obviously, every central bank and the Fed does not want their currency to rise because it hurts the economy. Just like the yen. Yen absolutely soared last night in the overnight session, and the Bank of Japan is trying to talk their yen down, their currency down. It's just not happening. Here's the daily UUP, and like you see here, 24 is really going to be the spot. And we just bring that down here. That's going to be the spot where that needs to hold. And that's the lower end of that bull flag from the weekly. But you can see here on the daily we have a symmetrical triangle. So we need to take this out at 24.83 and see where we go from there. And we need to really take that current swing high out of 25.20. 25.50 is that upper end of that band of the bull flag on a weekly. So just keep that in mind. Go right into precious metals. GLD, here's gold. And you can see here we have a descending triangle, measures down to about 120, 119.50, 120-ish. 61.8% off this low here is going to be this next true target. But we need to take out the 125. But remember, guys, gold can change in a heartbeat. I mean, I still see lower prices in gold, not much lower. I do think that gold is in the second stage bull market and really ready to challenge the highs. But we need to shake out the weak longs. That's how the markets work, unfortunately. Here's GDX, and you can see really nothing good about the GDX here. Yes, it's holding up a little bit better than gold itself, but 38% retracement coincides nicely with the 200, and then of course the 50 and the 61.8% is really, I think, the logic area around 19 to 20ish. That'll see that. You see that that current volume profile here. We have a thin zone. Usually when that does break down, it usually sucks price back down to the bottom end here. So we'll just see. That's a little bit far away, but let's keep an eye on gold and the GDX. Spiders, we got the gap fill here in the spiders. We're down here in the pre-market about 9 handles. Let's see if that holds, and buyers of dips come in and look to buy this market back up again. Now, remember, we have the debate coming tonight actually, Monday night. All right, there's the presidential debate, and you also have a ton of Fed governors speaking. Watch the tone. If they all start to talk more hawkish, more than likely they'll probably go and raise interest rates in December after the election's out of the way. But you can see here we got the gap fill. We got some support here. We got the 20 to 50 just below it. So let's see if we can lose that and get back down to this area here. Okay. Next is going to be the 60-minute. Just wanted to show you guys. We really didn't do much here. Thursday we gapped up and went sideways. We gapped down and we just kind of drifted lower on Friday, really with not much movement. And you can see here we've been in a range. It's insane. Look at this huge range for 2.5 months. That was the gap down 3 weeks ago last Friday. 3 Fridays ago, excuse me, and then we just went sideways ever since and gap up, and now we just kind of grinded lower here. So I'm looking for the markets for clues and evidence that we are going to move lower and challenge this low here to 1250. All right, that's the spiders. Transports, I showed you have right now a possible inverted head and shoulders. And remember, if the transports go, that's going to take everything else up with it. It is our leader here, okay, out of the 5 indices that we follow. IWM, our secondary leader, inside day from that Thursday pop. All right, here's that Friday. It still needs to have a gap fill. This right now index is in seasonal time of strength up until November. So reason why is a good reason why actually that the IWMs are up. And you can see here we still need a gap fill on the IWMs. And last is going to be the Qs. Watch the Qs. Apple had some weakness on Friday as well, talking about supply chains. They're tracking negative, so keep an eye on that to see what's going to bring upon Apple. Apple held the market up a couple weeks ago, as you know, on their supply that the iPhone was there's a shortage of iPhones, and they were tracking the best ever. And all of a sudden now something has changed. So let's see what happens. Keep an eye on NASDAQ. Keep an eye on these Qs, and also keep an eye on the VIX. Again, lots of short interest on the VIX, the VIX, which, as you know, is opposite. So when the VIX moves higher, the market moves lower. So you might want to keep an eye on that as well. All right, guys, let's see what this week brings. It's going to be very interesting, but it's going to be even more an exciting fourth quarter coming. Take care. Have a great day.